Hello and welcome to the look ahead for Tuesday, the 19th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So this week is a big week as far as central bank decisions are concerned, and they will kick off tomorrow with decisions from the Bank of Japan as well as the RBA. But let's just start with the Bank of Japan. There's been some uncertainty whether they will move away from negative interest rates in March or not. There have been a couple of hints over the weeks that the Bank of Japan could be looking to hike interest rates. But I think one of the big clues has been with regards to wage growth. We had the spring wage negotiations, which with the union Renko, which is the largest union in Japan, managed to agree a 5.58% wage increase for its 7 million union members, which was a 30-year high. Now, there is sort of growing evidence of this wage inflation cycle that the Bank of Japan have said that they want to see before they start hiking interest rates. However, there are some questions over whether it will actually be in March or whether they will wait for April when they've got fresh projections, which are also due to be released. So let's just have a look at the chart here. This is the US dollar, Japanese yen. Now we can see actually, despite there being sort of, rising expectations that the Bank of Japan could start to hike interest rates, we actually have seen the pair rise on US dollar strength. As we saw last week, that stickier than expected US inflation has really boosted expectations that the Fed may keep interest rates high for longer. So what's going on here? We've seen the US dollar, Japanese yen take over the support there at the 148.80. That was the January high. Looking towards, it's just testing at the moment 149.20. If we can get a rise above here, then we will see perhaps 150, the round number, being tested ahead of 150.90, which is the 2024 high. As far as the downside is concerned, I think we've got a support there of the 100 SMA that we can see, and below there, that's the low of 146.50, which is that falling trend line support. Now, as I said, there are plenty of central banks going on. The next one that we have tomorrow early morning is also the RBA. Now, the RBA is not expected to change its monetary policy either. Expected to see interest rates remain unchanged at 4.35%. But there is a possibility that the RBA will adopt a slightly more hawkish stance, given that inflation is still elevated, and despite signs that the Australian economy is starting to slow. Now, as we can see, this is the chart for the Aussie US dollar, rose to that high of bear with me, around the 0.6670 at the beginning of March. And it's actually fallen off again on the back of that US dollar strength that we've seen because of those rising expectations of the Fed keeping rates potentially higher for longer. At the moment, the Aussie US dollar is testing the 200 DMA. That's around the 0.6560 level. If that breaks down, then we could be looking for a move below 0.65 towards the 0.6450, which is the 2024 low. If we find that the 200 SMA does actually hold, then buyers are going to be looking for a move towards the 0.6620 level. That was last week's high. And if we can get above there, then 0.6670, which is the March high, comes into focus ahead of at 0.67. So just having a look what else we've got going on tomorrow. We've got the ZEW German economic sentiment data, which is also expected to improve slightly. Now, it's interesting because what we've seen is data coming in from the Eurozone and from Germany has started to show some signs that the slowdown there could have bottomed out. Obviously, we've had data from Germany last week showing that inflation continued to cool. And we've also got rising expectations that the ECB are going to start cutting interest rates soon, potentially as soon as June. Now, here we go. This is the Euro US dollar chart that we've been watching. The Euro US dollar has just fallen below that rising trend line that's dating back to early February. It's just hovering around that 109 level. Basically on the back of that USD strength that we saw last week, it fell below that rising trend line. As far as support's concerned, on the downside, you've got the 108.40, which is the 200 SMA. But I think we're really trying to see buyers get back above that 109 level so that they can then focus on the 110 psychological level. So yeah, and then as well as the German economic sentiment data, I've also got Canadian inflation figures that the Bank of Japan doesn't have their interest rate decision this week. They had it earlier in the month and left rates unchanged. And then we've also got US building permits. That's not going to be the main show. The main show this week is going to be on the Federal Reserve, who have their interest rate decision later on Wednesday. So just finally, I'm going to see if I can just bear with me. Here we go. Bring in the S&P 500, sorry, the Nasdaq chart here. Just worth having a look. If we can see, it's had that run up. It's been trading in a rising channel. Just seeing this sort of consolidation at the top after hitting that all-time high of 18,400. Again, we've seen it fell through that lower the lower band of the rising channel and did find some support around the 17,800 level, which is also the February low. Now we've seen a rebound off that level today. So that's going to be the support level that sellers are going to look to want to break out of in order to extend losses towards the February low around 17,100. As far as the upside is concerned, if we can see the momentum continuing to push this price higher, then obviously buyers are looking to get over the 18,400 level. I hope you like everything that you've seen today. And if you have, then please do give the video a like. And if you would like to receive more films like this, then please do subscribe.